Trading is not easy, but Jeffrey Benson is going to show you how he profitably trades GBPUSD in this video. I have been doing this for so many years. Today, I want to teach you what exactly I know about GBPUSD that make me to stay profitable so that you too can be able to always navigate. But the truth is, you can't always get it in a single trial. You have to keep trying consistently. If you're good at it, you keep trying, and I'm sure you definitely will be able to get to this level. But it's all about practice. Forget about the courses, forget about all the other mentorship. The major thing about learning a new skill, such as trading, is all about practice. If you keep practicing the right thing well enough, then you'll be able to get it. Underline the right thing. So when then you need mentorship is someone to tell you the right thing, to show you the right thing, because you can be doing the wrong thing for many years. That's the story for people who have been doing it for 20 years and then yet they're still so inconsistent. That's a lot in this industry. Let me head straight to the computer screen and then I'll show you guys how to trade GBPUSD profitably. First thing you have to understand about trading a currency pair such as GBPUSD, it's a major currency pair. Hence, there are a lot of news activity surrounding USD, first and pound. So you'd always have to make sure you always keep in check with Forex Factory. So Forex Factory is a website where we get to know the next news event that is about to be released. So just as simple as going to forexfactory.com. So once you get there, which is highlighted at the top, once you get there, make sure the first column is the date and then the time is the next column. We have currency as the next, impact, then the what's going to be happening today, the event, then the detail of the event, actual forecast, previous graph. So the basic thing you just have to look out for is on the impact. Day in, day out, we have various news impacts such as low impact, medium impact, and high impact. All right, so you want to start looking out for high impact, and that one is depicted with this red folder, right? Like this one right here. These are the high impact. So as at 1:30 a.m. Australian dollar had an high impact news of employment change as well as unemployment rate. All right, so that came out positive at some point, but then all you just have to watch out for is look out for the time that this is going to be released, what pair is going to be affected, what pair is going to be affected, and then check the forecast, the previous, and wait for the actual. So once you see any red folder, like about 2:30 p.m. today, we should be expecting by an unemployment claims on USD. So as at 2:30, you should just be careful as to how you take trade regarding that time. That is first step, trading it profitably. Now, I'm not saying you shouldn't trade news, because fundamental analysts love to trade news, but for me, I'm a technical analyst. I just love to play safe during time of news release. What I mean by playing safe, here's what I do. If I notice that news is about to be released somewhat close to a particular time when I'm going to be trading, what I do, I make sure I apply stop loss and I tighten my stop loss all around every sphere, because I don't want any slippage happening and then I start getting a drawdown more than what I already anticipated. You don't want that happening, okay? So that's why you have to make sure you play safe at that time and then you tighten stop loss. Make sure you go across all your entries and make sure you tighten them with stop loss, or you add stop loss if there were none. Then the next thing, you must have already done your analysis. So the basic analysis I love to do every day is psychological level. So I have psychological level of ranging from 1.23000 as at this time. So how psychological level just basically work is round up numbers. They are usually 50 pips far apart from the other one. All right, I want to use a round up number 1.2300. Then the next one is going to be 50 pips, right? So calculating from here to the next is 50 pips. From here to the next one is 50 pips. Okay, in order to calculate that, I have to take the measure to calculate from on here to this point. It's exactly 50 pips, right? That shows that this psychological level is correct. Then that's how I'm going to keep adding 50 pips all across, as many that is relevant to the current chart. All right, now if you would ask me, Jeff, what is the current analysis, or what do you think is going to happen on the chart? It's simple. First, the time is 1:50 p.m. okay, and then we're going to be having a news event by 2:30 p.m. Then the news event is a couple of hours, is a couple and a half away or so. Then that's no brainer, that's fine. Then the next thing I want to, since I'm trading on 15 minutes time frame, I've done my analysis. I've seen that price is currently close to psychological level, which is 1.2400. That's a good thing, because I love to trade off of zones. And then an M has clearly formed, an M pattern. So here's an M pattern that clearly formed right here. So price did moved up, came back down, and it moved up again, and it's coming down. So hence, I want to go in short at this level. So what I just want to do now is to go on my phone. Yeah, by the way, this is a live account. All right, it's a live account, and I want to go on the charts, click on here, press the plus sign, and then I'm going to use a lot size where I'll be risking 1% of my account at a time. So I want to go in for a sell. That's it. So that's the sell right there. Now, the next question will be, Jeff, what is your stop loss, right? Since I got in right at this point, my stop loss is going to be the next recent high. At this point, then my stop is going to be at this high. So it's going to be 24 pip away from where I'm currently getting an entry. And then my target usually, I want it to be by 2 times 2. So since I'm risking 24 pips, I'll be targeting 48 pips minimum. So 48 pips, around 50 pip there about. So that's what I'm going to be waiting for my final execution. So as you can see, I'm in small profit, okay, but in no time I should really be racking things about. Let me apply my stop loss. The stop loss here is 1.24143. 1.24143. There you have the stop loss. I'm gonna adjust. I love to leave my take profits open because I know that market will definitely might give me more than I already anticipate in case of spikes like that. All right, so this is how I would intend to want to trade. But before you guys click out, there's still one more concept I need to show you. This is the analysis part of things. Now it's time for me to take you to the risk management side of things. So when you have an account, you don't just go and start placing whatever lot size you like on your account. All right, so I used 100 lot size. That's because that's $2.6 million. So what you have to do is go to position size calculator like GBPUSD.com, and then you put in your account balance. So for the sake of this example, I'm going to be using $10,000 because that's the average amount of what most of my viewers trade with. All right, so I'm going to put 10,000 onto 3, and then I'm going to put, if you are trading with $10,000 account, if it's a proprietary firm, you want to be risking from 0.5 to 1%. If it's a personal account, you can go ahead depending on your risk capital and what you intend to want to gain. But for me, I would recommend you trade $10,000 account. You risk 5% of $10,000 account. I mean, $10,000. I'm scared to say it's small, but it's relatively small. Okay, so let me just do 5%. And this one, the stop loss is, we are doing about 20. How many pip stop loss the other time? 24 pip stop loss, right? I'm just going to come on here and put 24. And then the pair we're trading obviously is GBPUSD. So you're expected to use 2 standard lot size for this example. All right. So you just go ahead and put 2 standard lot size. But for me, why I did use 100 lot size, you're going to see it pretty soon. It's going to be 2.6 million. All right. Then I want to use just 1%. I'm expected to use 108 standard lot size, but I did use 100 lot size. Now you understand why that makes sense. So that is it. So if this trade whipsaw against me, I will be losing 26K. If it goes in my favor, I'll be making 2 times of that. That's this risk worth taking. So let me do one more example for those who are trading small account for $100 guys. So if you're trading a $100 guy, yeah, $100 guy, please risk 10% because it's relatively small. All right. So then your lot size, you're supposed to use 0.04 at a stretch. That's good. The next thing is the trade management as to how I stay profitable. Trade management has to do with anything that starts from after you click the buy or sell button on your trading platform. So now how I get to manage this trade is all around this trade management. Let me explain this concept. This concept is just all about making sure you don't widen your stop loss too much and then you don't tighten it too much so that you don't get taken out from the market before market actually make an actual move. You have to give the market some breathing space. Let the market breathe. So now, how I get to do that is I always love to look out for the actual zone. Since I placed my stop loss, I always love to look out for the next zone where market would likely make hesitation. So if I see that there's a new hesitation point, which might likely happen as a spike coming soon, there's a new hesitation point, I'm going to move my stop loss to that new hesitation point. All right, but it must be lower than this where I already have my stop loss at. So that's how I get to manage my trade. So, but however, I don't love to chicken out of trades because that always distorts my trading plan. It's either it goes directly to hit my stop loss or it goes straight down in my favor, and then I get to close out when I see multiple week rejection. So that's the side of the trade management that I get to use a long time. But here's one trick that you guys should know. In trading a pair profitably, it has to do with a lot with trade management. You shouldn't be getting in too many trades in a day. That way you can measure, because whatever you don't measure, you can't control. If you're able to measure the number of trades you have in a day, you'll be able to better tell the sessions that are doing well for you. It could be London session that you're doing a lot more better than the New York session. So for me, I love London session than New York because there I get to understand the moves better. I understand that it's not every session that come your way that you will always be profitable. There are times that I might messed up in London session and then I get to make it up during New York. Sometimes I could also make a good deal of money during London and then I get to lose a chunk of it back again during New York. So it all depends on how many numbers of trades you take and knowing what session really does the magic for you, and as to what psychology do you come into the market with at that particular time. For me, I love to come in the market with the expectations that nobody owe me anything. The market doesn't owe me anything. There are days I might even go out negative. There are days that I can even come out with break even, no profit at all, or making profit and not giving it back, or making loss and then making profit that will cover back that loss. I just prepare my mind to be neutral every day, day in and day out. Conclusively, all trading aspect has to revolve around these three concepts. Number one, you have to have a pure strategy, which is what I explained to you. Number two, you have to have a good risk management, which I also did explain to you. And number three, you also have to have a very solid trade management system in place. After you have a strategy to apply, you have to make sure you're applying the proper risk, no matter how good that strategy is. And you also have to have a good management to manage that trade as time goes on. So I'm sure if you're able to apply all these things in trading any currency pair, major currency pair like Euro, USD, GBPUSD, USD, JPY, USD, CHF, USD CAD, and so many other ones, trust me, you'll be able to come out on top at the end of the day. And if you do like my video, make sure you're subscribed. And if you're new to my channel, also like this video so that it can be subscribed to be recommended to as many other people who are out there. All right, see you guys in the next one. Bye for now.